All right. Good morning, everybody. Another day closer to Friday. I just seen U.S. Secretary Bissett says that all of this uncertainty over the tariffs is part of Trump's negotiating tactic, deliberately causing confusion and chaos, and that uncertainty will decrease on the tariffs every day and every week as they slowly funnel it into where they want it to be. Interesting take, I suppose. Maybe a bit revisionist. But right now, chaos is a large part of why we can't catch a foothold and continue to drive to the upside. With a lot of companies, GM and Hog this morning removed its 2025 forecast. GM came out with one of their newsletters and quoted plus 5 billion due to these tariffs. NASDAQ up 1.7, S&P 1%, Dow closer to 3/4, and the small caps at 0.25%. Really, really divergent between our own indexes. You know, a lot of times they'll be pretty close together, within 0.25% or so. So the idea is we have an outlier. Is it going to be small caps, which is the outlier, and will get caught up with its peers? Or is the NASDAQ the outlier and it gets caught up with its peers? So we'd be looking for the NASDAQ to fade back or for the Russell to catch up. Hong Kong down 1%. Rest of the markets somewhere in between. All of this just kind of hanging out, waiting. We're going to get more jobs data today. The manufacturing data, auto info, but the big one is the jobs. Employment is always a really big deal. If you're new to all of this, the Fed's dual mandate is inflation and jobs. So every time there's any sort of jobs data, you want to pay particular attention to that. It's not to say that the rest of it doesn't matter, just, you know, we got to put them in an order of importance. By noon today, we should be done with most of the official economic events for the day. You can see they kind of run out after the auction at 11:30. But we could get some kind of unofficial events if we have anybody speaking today, not just in the US, but around the world, and or if we get any headlines that we weren't expecting, right? Some shock and awe that we didn't see coming. Yeah, okay. He's doing a lot of work this morning. We'll see if he has to come back in later today somewhere else and clean this up. That would not be a surprise if we see him back this afternoon talking somewhere else. The US and the Ukraine did sign a minerals deal. So we did see gold get whacked a little bit, right? Peace generally is going to take gold lower. We are now above the call wall with that adjustment that we just made there. 5,600 in the SPX, 56.24 on the ES. So we want to be watching the call wall this week, see if it starts to get rolled out, rolled up. If they don't move it, then it's likely that we're going to go back down underneath it. Still really impressed with this drive that we've had since we've gotten out of this box. Getting out of the box was a really big deal. And we've talked about the idea that we're still looking for this next higher low somewhere. Somewhere. We got to get it at some point. The concern was that we were going to set that higher low somewhere back inside this box, which, we don't want to come back in this box. If we can avoid it, really don't want to come back in this box. So getting up a little bit higher and then pulling back and setting that higher low would be a good idea, right? So a little bit of a zone up here, 57.50 area. If we can run into that and then get a pullback and set a higher low above this box, that would work it out in our favor really well. So that's kind of what we want to see. Now, to be fair, we're already high enough that we could come back and just Busby off the top of that box, and that would be fine. But I think it would just work out a little better if we could go on up a little bit higher and get into that 57, 57.50, something like that. We got to keep it. We don't want to get back in that box. We talked about the megaphone pattern this week, and at some point, the discussion that we would break the megaphone pattern. We are outside of it now. The concern is on whether or not this is a fake breakout with a fast failure back in again. It's a little bit like a draw and raid play, right? You get the draw that brings everybody in, then you raid liquidity on one side and then flip it to the other direction. So same concern here with a megaphone pattern, breakout on one side into liquidity just to gather everything up and then take it in the other direction. We still got light volume from Japan. It should be like light volume from Japan all week. So that's not going to change really until we get into next week. The light volume could change, but not the light volume from Japan, right? That's two different things. So with the volume at 77, that's way above our norm, way above the average, but it's low for what we've seen in the last couple of weeks or so, right? We could even say that's the new norm in the last 100 days, if we want to just, say it that way. So if the new norm is in the 100s, then being at 77 is a bit light. We are closer to the upper edge than we are the lower edge. That would be 57.20 for the ADR half. To hit the ADR half in the other direction, we would have to first break back down inside of Wednesday's price and then continue to drive through it, break the Globex high, get down basically to where we opened yesterday. Is the RTH open, the 9:30 open. We'd basically have to run back to that, right? Close enough. We didn't quite reach the 1, 2, 3, 6, but we got really close. This is yesterday's high, so it's the level that we have to break to get back inside again. All right, today's channel is really wide. A wide channel implies that even if we do break out, the breakout doesn't stick. Well, we already did break out, right? We're just looking at that. We are broke out of yesterday's range. This wide channel implies that we won't keep that we'll go back in again. Now, these channels don't make price do anything. It just gives us some insight on what to expect out of price throughout the day. The pivot for today really isn't much different than yesterday. Those two pink lines are really close together. We opened above today's pivot, which is bullish, and we haven't hit it yet, which kind of feeds into the idea that we won't keep the breakout and we'll come back in again. Markets hit their pivot about 80% of the time. So if you say it another way, we have an 80% chance of coming down and hitting that purple line today. We don't have to hit it, to be fair, right? It's not the first time that we've missed a daily pivot. We had one back here for an example where we missed a daily pivot. And for the move to the upside, we haven't even reached an R1 yet. So if we were looking for a reversal back in the other direction, it's more likely to come after we get into that R1. Like back here when we stalled out just above the R1 before fading back in again. We don't have to hit it. It doesn't owe us anything like that. And if we're going to count this as an MDP, then one, we don't want to hit it today. And two, it would count for tomorrow, not for today. Right? The MDP is not counted today. We build it today and count it tomorrow. If we were to get a R1 S1 play, the S1 down here at 5507 is still within yesterday's range and just a little below the RTH open. Not by a lot, maybe 7 or 8 points. But there's yesterday's RTH, and it's just a little lower than that, right? When we look at these two. Couple of points. All right, as you would expect, it's really thin up here. We didn't leave a lot of footprints behind to get up here. And while we can build it out, you know, it doesn't, there's nothing up here that says it's going to knock us back down. If we do start to fall, since we didn't leave a lot of footprints on the way up, there's nothing to really bounce off of on the way back down. We have a point of control from late March, early April. We hit that, we've gone through it. We're now on the other side or just kind of digesting above it. So if we were looking at that as some old unfinished business, it didn't stop us from getting there. We're 100 points away from our own point of control. But that 5600's got more structure to it than getting through that structure to get back to 5550 by the end of the week when, you know, we're already over the hump. It's possible, but I think we need some negative news to really get it done. 10-day, 30-minute volume profile with TPO. Point of control on both of these are lined up really well. They're not perfect, but they're lined up nice. We've got the structure underneath this that we would want to see if we're going to keep this elevated range and not go back inside that box that we were talking about. It doesn't look like we're going to build out a new zone anytime soon, and we're not going to lose the current zone because we have to get through all of these weeks, or all of these days, excuse me, all of these days before we even get to that, which could take a week at least, right? We got to get into these candles and wipe that out. That's the only thing that's going to move that volume. And obviously, we're not going to get there anytime soon. So this point of control is not going to move unless we build out a new spot. Now we could cross back down through it and build out one of these other spots that are already slightly elevated, especially this one in the 5,500 area. But once coming back down through it would just put more of a footprint there. And then being underneath it and building it down here, not going to really change all that much, right? It's like a 50-point shift from where it's at now. So we just want to keep all of this structure underneath us. 5,500 is the line in the sand, or that box that we were looking at on the daily. All right, we cut through that new VPOC yesterday. We hit it, got a opposite candle color, and then managed to work our way through it anyways. 55.90 or the 55.92 cog line. So we don't need that line up there anymore, but we got a new VPOC down here. So we'll just move the line to the new spot. So now we've got a couple that we've left down below. We still have one overhead from this contract. These cyan ones are from the previous contract. That's why I changed the color. Previous contract change was here. It might be hard to see that line in the live stream, but that's the contract change event. The thinking behind this is if these points of control represent unfinished business and we've rolled out of those contracts and we don't have them anymore and we're into new contracts, when they rolled, what's the likelihood that they kept the same, strikes when they rolled out, or that if they weren't using the options on those futures and they were just rolling the futures, that these levels have any value at all on that old contract? My argument is they don't. But to validate that argument, I still got to keep track of them and then see that price doesn't respond at those levels and that they are worthless. So it's kind of a work in progress to prove that once we've rolled the contracts into the new expiration or the new series, that the old point of control doesn't help us any. I know that's certainly true with the anchored VWAP, right? We try to anchor those VWAPs off new contracts. Worthless. Absolutely no help whatsoever. Live and learn, huh? Today's distribution, it's almost in a classic shape, which is nice to see because the profiles haven't really been all that nice lately. Classic D shape represented on both sides with a point of control matching on each between the TPO and the volume profile. Nothing really new here or enlightening at this point. We're just holding steady in a nice clean distribution. We are 1% above the 10-week. it's good to be back, right? We haven't been up here for quite a while, all the way through March and April, and now, first day of May, and we're happening to get up there. What's that old adage? Sell in May and go away. I mean, we already did a lot of selling already, so maybe we skip that this year. At this point, obviously, we're not overbought, we're not overextended, we haven't gone too far too fast, and it doesn't owe us anything. We're not getting into any resistance zones or anything like that either, so we're good. Now bring it over to the daily, and that story changes a little bit. Above 2%, we got to worry about how far away we are from the moving average, and we're beyond that at 2.5%. It's not the worst that we've seen. If I bring my mouse up into that 2.5% area, you can see that we've been higher than this before. Funny enough, it was in the 2022 bear market where we were above the 10-day at a higher level than 2.5%. Why? Because it goes back to the conversation that in bear markets, you can get some of the biggest up moves in history, some big bull moves in a bear market. They don't generally stick, but it's where you can often find them. So what we want to be watching for here is fast reversals. If we go back in the past and look at some of these others where we had a bear market and we were above 2.5%, we didn't linger up there, right? We got above 2.5, maybe held it a day, and then flipped it over and came back in again. Now, that doesn't necessarily mean that price is going to go back down. All we have to do is stop moving, and price, the 10 will come to us. So, don't take what I'm saying to mean that we have to go down or that we're due for a move down. It doesn't owe us a move, and we don't have to go down. All we have to do is stop moving. This week's range ends at 56.75. The idea would be that we're supposed to close inside this box 70% of the time. Since the S&P has such an accurate expected move, we generally say, it closes inside the box 80% of the time. But it is a one standard deviation, so it doesn't owe us an 80. It only owes us a 70. And we haven't been hitting a 70%. So the likelihood that we stay inside this box is greatly diminished. We've been consistently ending the week outside of the box. That's not likely to change until they quit mispricing volatility. If we look at things over the last 5 days, which is what these labels are in the upper left corner of all these charts, only energy is down in the negative, and by quite a lot, really, 2.5% over a 5-day period. Everything else is some form of green, even if it's only 0.5%. When we look at growth versus value, growth has been outperforming. So it's not to say that value ain't doing anything good. They're just not doing as good as growth names are. And we can see that reflected here with nearly everything up except energy. So we want to keep our eye on that rotation and spot if it starts to fade off, we start to lose it. That would be a little helpful tell. So looking at things that are down this morning, oil and gas, exploration, energy, which is really generic, just XLE energy. VIX is down. Gold miners. You get those errors if you push Thinkorswim too hard. So to remove those errors, just had to shorten one of the watch lists. All right, so we got the Mag 7 up, Bitcoin, tech, generically speaking, tech. We got growth, more Bitcoin, more chips, more growth, uranium, communications, consumer discretionary, China names. We've got just everything that we would want to see for a rally day. We really only need the Mag 7, but if you can get Mag 7 and chips, that's a really strong push. If you can get Mag 7 chips and China, then that's awesome. It's really broad. And just tech is kind of generic. So when we spread that out a little bit and say communications and chips, then that's even better. So we've got a nice array of things that can fuel this breakout today. So it doesn't have to go back in. But there's still risk on the table. We were sideways in the first part of this week for a number of things. QRA and the Mag 7, 4 of the Mag 7 reporting earnings this week. Plus, we've still got employment data by the end of the week. So we can keep this high and hold the line without really doing much more to the upside and without giving it all back to the downside. I don't expect to see over exuberance, one of those days where we just keep running and running and running and running. And we all keep saying, gosh, I wonder how long it's going to, when's it going to stop? And it doesn't stop and it just keeps going. One of those days. I don't think it's going to be one of those days. If it is going to be one of those, we still got to get through that red line first. So let's get through that. If we continue to push past that, then we know where we're headed. It's the yellow line up there. We just keep driving in that direction. Right? We just keep setting our drawings for the next leg up and run it. Otherwise, we got to get back inside of yesterday's range. Our Globex this morning, it's always a little sloppy when you're looking at that sort of price action. It's a tight, narrow range for sure. The IB was really nice, right? We're outside of the IB, but it was a nice windup. So we got to get back inside yesterday's range or get out of this Globex range to the upside and continue our expansion. $56.60 on the upside, $56.15 to the downside. GTFO, get out of the box. Simple enough. So it's not just miners that are down this morning. Precious metals are down as well. Gold, silver, you can see that getting hit. It's a really nice distribution on the things that are up this morning. All right, 45% of the NASDAQ is up at least 0.5%. That's a really good start. When we're looking at that breadth and trying to see how many names are up, it does sort of matter what names are up, right? If it's chip names or, part of the Mag 7, that would be better. We can see a lot of semiconductors here. This list, it almost covers the entire page. So we know we got chips. And then, of course, we've got some Mag 7 names in there. Flip over to the S&P. 28% of the S&P is up this morning, 0.5%. Not as much as we would expect, right? What happened to that bullish exuberance where everything looked really good? Not hitting the names that we need it to hit. It's hitting the right sectors, hitting the right industries. But we need more than this. So we do have the Mag 7 in there. And we do got some chips. And we know the Mag 7 can do all the heavy lifting on their own, but that's not what we want to see. So 0-day options can move us out of this box today, or Treasury and yields can do it. And of course, the sectors like we were talking about can do it. We don't know of the options today because it's not even 9:30 yet. We couldn't see those in the pre-market. So far with the news that we've got coming, we don't have any expectation that it's going to move dollar and yields. But the dollar is back up to 100. A breakout above 100 would start to change things. We've been underneath it now for a while and holding steady underneath it since halfway through April, it looks like. At least after that really big drop to the downside, we've been underneath it and been keeping it. So keep your eye on the dollar today. Don't want to see it pop above 100. And if it does pop, we definitely don't want a fast move like this big move that we had here. We don't want big moves in these. And the 10-year, it's like it wants to continue this move to the downside. Swag level 4.1 would be an area of concern. It's still a little ways off from that. 4.1 is down here. Just not getting there too quick would be good enough. If it could just take its time, that'd help. We don't want any extreme moves, right? These big swift moves, not good. So do I have a little bit of a threat there that could shake things up a little bit? My base case argument is that we don't continue to run today because we still have a big threat, and at the end of the day, we got more earnings, right? But that if we do break out, it could be one of those days where we just keep on going because we haven't had one in a while, and kind of feels like we're due. All right, so GTFO, get out of the box. Everybody be careful, be safe. Have a good afternoon. I'll see y'all tomorrow.